It's time now for your Money Watch report. The government has just released the April employment report. U.S. employers scaled back their hiring during April, and this added 175,000 jobs in the face of higher borrowing rates. CBS News business analyst Jill Schlesinger joins us from New York with the numbers. Jill, good morning to you. So, what were the April results?
So as you said, a bit of a pullback, 175,000 jobs added, and added is the important part. We didn't lose jobs. But this is lower than, let's say, at around 250,000 that we've seen over the last few months and over the last year. I think what's important here is that you're going to hear, oh, this was a disappointment. It was a miss. But it's actually what the Federal Reserve wants. They want the job market to cool down just a little bit so that wage growth starts to cool and then inflation cools. So I think the Fed's going to be very happy with this. And by the way, the unemployment rate, it held steady at 3.9%. We've been at 3.7 to 3.9% for almost a year, so not a lot of movement there.
All right, you brought up the word inflation here. A lot of consumers are concerned about it, which remains high. Are wages keeping up with these price increases?
They actually are. Overall, wages were up 3.9% from a year ago. That's still ahead of the inflation rate, 3.5%. But again, if you're looking at this like what the Fed really wants and what we're hoping for the economy about inflation, we want wage growth to come down and for inflation to come down. It's almost like the Fed would be happier if wages go up by, say, 3.5%, but inflation goes down below 3%. They'd be very happy with that outcome.
Jill, the Federal Reserve met this week. They decided to keep a benchmark interest rate at a 23-year high. Was there any clue about when they may start cutting rates?
It's like everybody wants Chairman Powell to be like, okay, it's going to happen on this day. He's not going to say that. He does keep saying that inflation is higher than officials would like. He said that even though that's the case, they're very unlikely to raise interest rates. They will probably start lowering rates later in the year. And again, if we keep seeing the job market slow down and wage growth slow down, I think it is possible that we see inflation come down, and then we're on track to have maybe 1 or 2 rate cuts by the end of the year. For now, right this second, rates are high. I get it. Bad news for borrowers, but hey, savers, get out there and take advantage of these high rates in your money market accounts or high yield savings or CDs, because they will not be at this level for the entirety of the year. I think they will come down.
All right. Thank you, Jill. We appreciate it. And you can see Jill regularly on CBS Mornings and the CBS Evening News with Norah O'Donnell. For more analysis, go to JillOnMoney.com.